Hey everyone, welcome back to Corporate Decoder, the place where we crack open the financial filings of big companies and figure out exactly what is going on behind the scenes. And sometimes companies do things that are a little bit... Let's not get ahead of ourselves though, we have a really interesting filing today. It is about a company called AGL Private Credit Income Fund, and it looks like they have been busy making some changes to their borrowing arrangements before we dive in. If you appreciate getting straight insights from these complex financial documents, make sure you hit that subscribe button. And hey, if you want to chat with fellow finance enthusiasts and get even more exclusive content, check out our Discord community link in the description below. So AGL Private Credit Income Fund, or AGL Private Credit Income Fund for short, is letting us know about something called an amendment to a credit agreement. Now, what does that mean in plain English? It means they are changing the terms of a loan they already have. Think of it like going back to the bank to change the interest rate or how much you can borrow on your existing mortgage. The key players here are PCI Defender Funding LLC, which is a part of AGL Private Credit Income Fund, and a lender called Versailles Assets ILLC. What is the big deal with this amendment? Well, they are increasing the amount of money they can borrow. The total amount that lenders are committed to give them is going up from $250 million to $350 million. That is an extra $100 million in their pocket, or rather their company's pocket. Now, this is a significant jump, and it tells us something about where the company sees itself going. They are likely looking to grow, expand, or perhaps fund new investments, and they need more capital to do it. Now, here comes a really important detail about the cost of this extra money. The interest rate for borrowings above the original $250 million amount is actually going down slightly. It is dropping from a margin of 1.95% per year to 1.90% per year. This is unusual. Usually when companies borrow more money, especially in potentially tighter economic times, the interest rates tend to go up, not down. This small decrease suggests that the lenders are confident in the company's ability to repay and are willing to offer slightly better terms in exchange for their business, or perhaps to secure a larger loan. For the company, this means that borrowing the additional $100 million will be just a tiny bit cheaper than they originally planned. It is not a huge difference, 0.05% doesn't sound like much, but when you are talking about hundreds of millions of dollars, it adds up over time. One interesting point is that AGL Private Credit Income Fund is checking the box to be considered an emerging growth company. This means they are a company that has had less than a certain amount of revenue and is therefore allowed to follow some less stringent reporting rules. It also means they get to decide whether to follow new or updated accounting rules at their own pace. For a fund that is borrowing money and growing this classification is pretty normal. It suggests they are still in a growth phase and are working to establish their financial footing. So this filing is all about this amendment to their credit agreement, which is a material definitive agreement. That is just fancy lawyer talk for a really important contract. They entered into this amendment on December 8th, 2025. This is where the story really is in this filing. It is not a financial statement in the traditional sense, but it is a critical piece of information about the company's financial health and its future plans. They are essentially signaling that they are ready to take on more debt and likely more ambitious projects. And who is signing off on this? That would be Taylor Boswell, the Chief Executive Officer. This shows that the top leadership is directly involved and approves of this significant financial move. It is a clear signal from the top that the company is moving forward with its expansion plans by securing additional funding. Looking at this filing from a Warren Buffett style perspective, we see a company that is actively managing its debt and seeking to grow. The increased credit line to $350 million shows ambition. The slightly lower interest rate on the additional borrowing is a positive sign suggesting lender confidence. However, we must remember that more debt also means more risk. If the company's new investments or expansions do not pan out as expected, they will still have to make those payments on the larger loan. The fact that they are classifying themselves as an emerging growth company with the option to delay accounting standards is something to watch. While it provides flexibility, it also means we might not get the most up-to-date financial picture as quickly as from a more established company. The key question is, what are they doing with this extra $100 million? Are they investing it wisely? Are they acquiring other businesses? Or are they simply bolstering their reserves? Without more financial details in this specific report, we can only speculate, but the move itself is a bold step. Alright, that is our breakdown of this AGL Private Credit Income Fund filing. What is your take on this increased borrowing? Are they being smart or too aggressive? Let me know your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. And remember to check out the Discord in the description for more discussions and insights. Thanks for watching, see you next time.